All right, welcome to The Explainer. Today, we are digging into a sneaky penalty that's costing drivers hundreds, sometimes even thousands of dollars. And it's for doing something you'd think is a good thing, being loyal.
So let's just jump right in, because this whole idea sounds completely backward, doesn't it? But it turns out, just staying put with your car insurance company might be the single most expensive mistake you're making with your money.
First things first, we've got to understand the secret system that's at play here. This isn't just about random price increases. No, this is a system that is literally designed to make a profit from the trust you put in them.
Now, in the industry, they have a very clean, official-sounding name for it, price walking. And it is a deliberate strategy. They use algorithms to pinpoint which customers probably aren't going to bother shopping around. And then, year after year, they just slowly walk that price up.
But, consumer advocates, they have a much more blunt name for it. They call it the schmo tax. And that just nails the problem, doesn't it? It's basically a tax on everyday folks who believe that loyalty is supposed to be rewarded, not punished.
And here's what gets really fascinating. They're not just pricing you based on your driving record anymore. Oh no, they're pricing you based on your personality. The industry calls it price elasticity, which is just a fancy way of saying, how much can we squeeze this person for before they finally snap and go somewhere else?
So how in the world do they build that personality profile? Well, they use all this behavioral data that has literally nothing to do with how you drive. Things like how often you get a new phone, what magazines you subscribe to, even whether you've been looking at price comparison websites. All of it can flag you as someone who doesn't like change, making you the perfect target for a rate hike. I mean, it's kind of creepy when you really stop and think about it.
Okay, so let's move on and look at how this all adds up, because we're not talking about a few bucks here and there. This builds into a staggering real-world cost for millions of drivers.
The data here is just undeniable. It's so clear. The longer you stick with one company, the more you end up overpaying compared to a brand new customer with the exact same driving profile. After just 4 years, you could be paying over $600 more every single year. A decade? Now we're talking over $1,400. Wow.
And believe it or not, it can get even worse. If you're one of the millions of people who bundle your home and auto insurance, that loyalty tax can swell to over $2,500 a year. That's a family vacation. That's a huge chunk of your emergency fund. Just gone.
But here's the good news. People are finally catching on to this. A massive consumer revolt is happening right now. Drivers are fed up with being taken for a ride, and they're starting to fight back.
The industry itself is calling this a shopping sizzle. Look at these numbers. Policy retention rates, that's the percentage of people who stay with their insurer, are dropping hard. We're talking from 83% down to a projected 78% in just a couple of years. In the insurance world, that is a massive, massive shift. And get this, in a totally surprising twist, the group that has historically been the most loyal, seniors, they're now leading the charge. You've got folks on fixed incomes dealing with inflation, and they're ditching 20-year relationships to find a better deal. It's being called a silver rebellion. You gotta love it. This revolt is also hitting insurers right where it hurts, their bank accounts. This isn't just about customers leaving. It's about legal action. Big companies like Farmers have been hit with massive, multi-million-dollar settlements for using these exact pricing tactics. Okay, this brings us to the most important part. How can you figure out if you're being hit with this tax and, more importantly, what can you do about it, like right now?
All right, here are 3 dead giveaways that you're probably being targeted. First, you get your renewal and see a tiny little loyalty discount, but it's completely wiped out by a much bigger rate increase. Second, the miracle price drop that only seems to happen when you call them up to cancel your policy. And the easiest test of all, if you've been with the same insurance company for more than 3 years, you are almost certainly overpaying.
So the biggest takeaway from all of this is you have to completely flip your thinking. In the car insurance world of today, loyalty isn't an asset anymore. It's become a liability.
The way you fight back is actually pretty simple. Here is your single most powerful weapon. You have to make shopping for insurance a regular financial habit. Just like you check your bank account, you need to shop your rate every 12 to 18 months. No exceptions.
And here is exactly why that matters so much. $461. That's the median amount of money people save per year just by switching carriers. That's not pocket change. That's real money, and it's your money. To put that number into perspective, for a lot of families out there, especially with costs being what they are, that's like getting an entire month of groceries completely free. By taking this one simple action, you're putting real cash back into your budget for the things your family actually needs.
So, I guess it all boils down to one final question. You spent years, maybe even decades, being a loyal customer. After seeing all this, you really have to stop and ask yourself, how much is their loyalty to you actually worth?